Okay, so I wanted to do another video here um, on, sorry, on cryptocurrencies. So obviously these are the hot stocks. These are way hyped in the news. All that shenanigans. Everybody won't stop talking about them. Yada yada yada. So I want to show how the strategy is actually most successful in high volatility, and we haven't seen this volatility since dot-com era stuff, or 2008, which is only like really 6 months. This stuff is insane, insanely successful. um, and I want to kind of show how we would look at things like that. um, Personally, I think it's actually worth the discussion, or I guess the idea, um, uh, to potentially run some numbers on this, because it's the hot space to be in. And if we get good data coming out of here, I think we it's worth it's worth discovering, or worth looking at. So we'll start with Bitcoin. Um, Obviously, it's got public adoption and all that stuff. So uh, when we get into like volatility like this, from a trading standpoint, from my background, which is simply day trading, it's really hard to 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 exit your position, because it's easy to buy something that's going straight up, right? And if it goes down, you just buy more, and it's so easy to go straight up. So what's the sell? Like, how do you pitch to someone that your strategy is successful compared to somebody else's? So here's the monthly chart of Bitcoin. Um, Obviously, it's literally straight up. So I guess just to preface this, there's something I use for volatility. It's called parabolic SAR, which is these dots down here. So you can Google it. Essentially, it's just this parabolic mathematical measurement of and I actually really kind of forget. I've been using this for years. Like, I need to do some research on what exactly it is. But it serves as like a secondary stop, really, in high volatility. If nothing else, use parabolic SAR. And I'll pull it up here so you know what it is. Parabolic SAR. Um, yeah, so it's just a price and time based trading system, basically. So we can look into that in more detail, but it provides another objective criteria for like the worst case scenario of a stop if you're going to trade volatility. So you can layer that on top of our strategy if worst case scenario. Um, it's just an objective approach, at the very least. So let's kind of scale this down if you can get on this monthly. Oh, dang it. Let's see if we can do this. Okay, so let me zoom out here. Sorry, this is way not clean. Okay, so let's scale this way back when, before Bitcoin was hot topic. So let's go something like this. Let's go 2016. Okay, so this is from the Coinbase exchange. So this is only showing at 15. Obviously, this thing was trading back in 13, 14. Um, so as we see here, this is pretty similar to what we've seen in all the rest of our stocks. There's really nothing special about this before we start taking off on volatility, right? So at a high level, we start on Coinbase, the Coinbase exchange, with shooting star on the month, takes it down, doesn't do much, takes it down low 300, goes inside month here, reversal month here, doesn't do much of anything for about a full year. So then 2016 starts. We take out the highs here, which, like I said in a few other videos, taking out the highs um, is usually fraught with selling. Stops are taken up here, so on and so forth. So you see that again: inside month, inside month, inside month, and so four inside months in a row, kicking off 2016. Right, and the last inside month is an inside month hammer, and this is just pent up equilibrium here. Is the way we look at things from the strategy perspective. The odds of four inside months in a row, pretty much, if anything, is uh, is hardly ever seen. So a lot of wrestling going on here, a lot of positioning in, not much going on. See, volume is relatively low, not much going on here. The inside monthly hammer finally gets us out of the range, but still not with much momentum until we do eventually take off within a few months. And we have another inside month and down, which countered by a hammer though. So if we were in this position randomly, let's say we do get in here hypothetically on this hammer, we take it up, and let's just only trade the monthlies. We go inside month and down, so we're stopped out here hypothetically at 608 after an entry at 437. So decent $150-$60 gain here inside month and down. We'll take the gain. We're at all-time highs at this point, inside month and down, but we counter with a hammer. Okay, so this is also very important, the counter signal in high volatility situations. So at this point, we've tripled in price. It's still not even mainstream yet. But the counter signals are very potent because it means people are out of the market. It's a sell signal for a lot of people. They're out, but buying caught back in from the 500 level, brought it back up to 600. So if you're out, you're going to chase and get back in. So hammer goes up, closes the month here. So you're kind of at a loss at the end of the month. At this point, so we're long at 630. The high does barely tick it out here this month, 631. We close the month 608. So we're down $20 at the close of this month. So from a strategy standpoint, what I'd like to do is, if we're only going to trade any time frame, if we ever pick one time frame and we kind of dumb it down to that, at the worst case scenario, we pick the low of the time frame. So we put a stop at the bottom of this month at 568. And let's disregard the numbers for now, but so we put a stop here just to have us a frame of reference. So we take off, and essentially, we off to the races at that point. Is this an outside month here? Yes, this is an outside month here. No real signals though, other than that. So if we were to have a trailing stop at the low of each month, if we're going to swing this position long term, we would have been taken out this month. Kind of a bummer because we don't really have any other signals in the monthly up until all of this shenanigans here. Here's another monthly hammer, but this is like $1,000 later. So that's kind of an analysis of the way Bitcoin started. So the question then becomes, once we get into super volatility, because at this point, I don't know really. This isn't much of volatility. The ranges on these things is a couple $100. Here's where we start getting a couple $1,000 ranges that are very, very much worth considering trading. Monthlies, like I said in the second video, volatility when you look at longer time frames do not matter. They're important. Like if you're trading outside of a range, like we don't want to be trading inside ranges too often, but long-term time frames don't matter as much when we have severe volatility like this. So let's take this down to the weekly chart here. Man, this is crazy. Let's see if I can zoom out a little bit. Okay, so here's where we're at now. We're currently actually inside week and up on the Bitcoin. Another buy signal. So let's kind of take it back here to the beginning of 17. I've sent some slides out before, but we'll just kind of walk through this. So we start. Let's back this up a little bit. Okay. Jeez. Okay, let's walk through some of these weeks. Okay, so here's the beginning of 2017. And even then, we don't really, there's not much going on talking, like as far as, the media and news and all that stuff about Bitcoin. We started really getting news in the second half of 17 about, Bitcoin's volatility and where it's going. So let's start here with this inside week. Randomly, obviously, just walk through a hypothetical situation. Inside week and up, if we want to, we got to again figure out what the strategy is going to be, because these moves are so clean on volatility. Inside week and up, nice 3-week run here, shooting star. We could have been stopped out here, but the counters with a hammer again. So hammering up, we would have been long again. Not a shooting star, but does take out the previous week's low, which should be our alternative stop here. Takes us out. A decent 2-week sell off here of $1,500, goes inside week and back up again. So inside week up, weekly hammer up again, hammer, 2 buy signals, all the way back up until we get an outside week. So the outside week is, like we said, I think in the first video, is not much of a signal, but it shows short-term volatility. So we tick out both sides. If you're buying the highs, you're taken all the way back down, and you're stopped out the low of this time frame. Boom, everyone's taken out. Um, so now we kind of start over. So what does the outside week mean? More volatility. So we take an outside week out. It's got to stay outside, and of course it does. It went out at 8,000 and went all the way back up to almost 20,000 in the next 5 weeks, till until we've had kind of where we're at right now, without any other signals. So at this point, we take the outside week and up. We want to maintain these stops, whether it's a low of the previous time frame or, like when I started the discussion, some other objective criteria like parabolic SAR, which actually was taken out in December, down on this huge move of $8,000 in 1 week. Excuse me. So I know that's kind of a quick and dirty rundown on how we would trade volatility. That's just a weekly chart. You can go to other things like Ethereum. This is just such a thing of beauty, really. This inside week here is just beautiful. Inside week and up above 771. Perfect move all the way up to the top all week long. Easy. You could have not traded Ethereum ever until this week, and you could have made an easy $400 this week. Here again, inside week and up, 2 weeks of buying. Another inside week, you can buy some more. Weekly shooting star all the way back down. You stopped out here. So here, if you stopped out here at 335, you just saved yourself 50% on this move back down to 200. So in that sense, it's really providing us an objective, criteria here. So then, kind of go back a little bit further. This inside week here was absolutely beautiful, especially if you want to do the range, as far as how you're going to set your stops and your buys. You'll see up here the high is 50.30, the low is 47.20. You're taking $3 of risk for literally, well, I can see literally never being stopped out. I think this is probably a bad tick, but if not, that sucks. But you're taking $3 of risk for potentially never being stopped out. And that's the beauty of the strategy, is that these signals mean something. Equilibrium means something. Clearly, you have another buy signal here. You can buy some more. This bar here doesn't really show us anything. It's not a buy or a sell signal. We do have parabolic SAR was taken out in this move, and it was taken out the low of this prior month. We go inside, down again, and then inside month here, this red month in July, or week here, all the way back up, like we just discussed, and kind of do it all over again. So that's kind of the way high volatility works. There was